Welcome to the Compassionate Capitalist Show. For those that have listened before, you know that one of the things that's near and dear to my heart, part of the reasons why I wrote the book, or my impetus to write the book, Inside Secrets to Angel Investing, was all about crowdfunding being the sort of the great, I called it the great experiment initially when in 2012, because it was something brand spanking new. Now, reward-based crowdfunding had been around for a while, but it was something really new and outside the comfort zone of the SEC and a lot of our legislative communities and a lot of people and angel investors, traditional angel investors as well, about this. What do you do about helping removing the barrier between entrepreneurs to get access to capital from investors when they're not necessarily in a geography where there's an angel group, or in a particular industry that angel group is focused on? And crowdfunding, equity-based crowdfunding, was the best way for those entrepreneurs to be able to reach out to their potential investors that would also potentially be customers. They're an affinity group. They relate to what the company's doing. They think it's a great idea. They like the entrepreneur, whatever. The same reasons why traditional accredited angel investors would invest. Now people could do that through crowdfunding, regardless of, there's some limits on their income, but if they have discretionary income, there's ways for them to play when they want to participate in this asset class. And so it was a lot, it took a few years for all that to come out. Intrastate became one of the ones that so many people thought was just perfect for those companies in a state that might be in a traditional business. There, maybe the founder's a member of the chamber, and he knows all these other people, and they just don't know how to raise capital, and they're not necessarily a pure startup that has that low valuation that accredited investors want, are seeking. There's somebody that's a traditional investor, somebody that normally knows how to read the financial statements on their Yahoo Finance, and they're looking for good deals on public stock. What better way for them to get involved in a company that has proven that they can be successful and is raising growth capital, and they can't get it from traditional angels, they can't get it from VCs, they can't get it from private equity funds. They need more money than a bank will give them. Where do they go? Well, the crowd of their fans, the crowd of the people that understand their business model, that understand that industry, are really ideal for them to be able to participate in that and share in the success of that company. So it's been something that's been on my heart for a while. This I call, of course, compassionate capitalism, because that's when people invest their knowledge, time, resources, and money into entrepreneur endeavors in order to bring innovation to the market, create jobs, and create wealth. And that works for companies at every stage and for investors at every risk tolerance. So one of the things that time tells, right? And a lot of things people go and put states got jumped on. Georgia and Kansas were the first ones to do interstate before the Jobs Act passed in 2012. Every state now has some form of an interstate on it. It's been raised at the federal level that they are allowed to do up to 5 million. Some states have adopted that as well. And I have a whole section in my book talking about the all the stuff that the different states are doing. But when you find out that there has been, just because hindsight's not is 2020 and foresight, you just don't know. There's barriers to companies being able to do that. There's all this promise of when there's a barrier to that, it is so refreshing to know that there is somebody that recognizes that and is going to take action and commit their resources, their knowledge, their influence to be able to do that. And my guest today is that person. Russell C. Weigel III, Commissioner Weigel. He is the Commissioner of the Office of Financial Regulation. He has recognized that, and he is working to make changes so that it's easier for entrepreneurs in Florida to raise capital through intrastate crowdfunding. And he is also committed, and which is near and dear to my heart, to education, to raise the awareness on the investor side of that there are these opportunities. Okay, so the purpose of our talk today is to learn what Florida is doing, what the challenges are, what they're trying to do, and getting feedback from the investor community, the business community, what they're trying to do. Their call to action for those that are listening, if you're in Florida, to reach out and say something, okay? And then for those people in other states, this is also a call to action for you to look at your own rules to see why is it that interstate hasn't exploded in your own state. Is there a barrier similar to this? So this is just, I'm very excited and very honored to have Commissioner Weigel on the show. I am going to give you an introduction here, tell everybody why you know all the stuff you know. But first I want to say hello and thank you for joining me today.
Oh, thank you so much, Karen. It's a pleasure to be here, and I'm really excited to have an opportunity just to be on the podcast. Thank you.
You're so welcome. So here's a little bit about Commissioner Weigel. So he's an AV-rated securities attorney with more than 30 years of legal experience and a published author. In 2005, he founded a securities, transactional, and litigation law firm, which he ran until he became the commissioner in March of 2020. So this is pretty recent. Prior to that, he served as a securities, transactional, litigation attorney and an enforcement attorney with the SEC and assistant state attorney for the Office of the State Attorney of the 10th Judicial Circuit, and holds an undergraduate degree in economics from Vanderbilt University and Juris Doctor from the University of Miami School of Law. So again, thank you for joining on the show. And that's really, because that shows you have both sides of the equation. The fact that you've been on the SEC side and know the concerns that they have in protecting investors, which is what most of what the SEC does, but then also on the business side of that and understanding the struggles that the regulatory rules and the barriers that they've put on it for companies raising capital. So, let's talk about the state of capital and entrepreneurism in Florida. I know of a number of angel groups that are scattered all over the state of Florida. There's about 80 incubators and startups around Florida. I think when I had done some research, because I was a keynote down there for University of Central Florida and the Bridge Angel Group to talk about crowdfunding and the Jobs Act and economic development and this whole stuff that you're doing. This was years ago before you were, I think it was 2018, but that was I had done some research then, and at that point in time, it looked to me like Florida was doing really well in overall, and I thought it would compare to Georgia because Georgia is very central around Atlanta, but in Florida there are angel groups all over in all these different cities, and by them syndicating, it was companies, startups, and again these are mostly tech companies. They had an access to capital within that, but that's your traditional sector. That's not with what we're talking about today, which is interstate. So talk about what you've experienced either prior to coming into the commissioner or the commission position, or, and going forward, and what you discovered and why you realized this was an issue when it comes to these kind of companies raising interstate capital.
Well, thank you very much. Well, I can tell you that as a securities attorney in private practice, in the 2000s, one of the things I realized, I was running my practice out of Miami, and it didn't take too long to figure out that Florida had a very stiff legal framework for any kind of intrastate securities offerings, and I was puzzled by that, and I started making inquiries over time. I'd spoken to different legislators. I had spoken to different lobbyists, and I always got the same answer, and that was the Office of Financial Regulation is against it. I wanted to, change some of the statutes, make it easier for companies to raise capital and participate in the system. Just to give you an idea, there's really two ways to go. I mean, generally speaking, when you're trying to do an offering, you're either going to register it and have either a state or the SEC review that registration statement and eventually, give you a thumbs up or a thumbs down about your disclosure, or you're going to do it without government oversight and you're going to do it under what's called the exemption statutes. And or an exempt offering. Well, our registration scheme includes one that is designed to benefit small companies. It's called the SCORE, Small Company Offering Registration, and many states have that on their books. Florida has it, and our statute says basically that you're not even eligible unless you're 3 years in revenue. And another bar is that if you're insolvent, you're not, you may be disqualified. And so these are gigantic non-starters for startups. And
Right.
obviously, if you're pre-revenue, you just don't qualify. And
Wow.
so that's it. And so I wanted to change that. I mean, Florida has a history of fraud. I mean, there's no question about that. And the reasons why our statutes are the way they are based on our history. But we're a different state in 2020 or 2021, than we were in 1950, and or 1960 or 70 or 80 or 90. I mean, we've been evolving, and we're now the third largest state, but our capital system has not evolved, and what we have we have close to 21 million people resident in the state now, and being the third largest state, we're curiously the one in the top four that doesn't have a capital market, and against Texas, against California, against New York, all of which have long developed communities that are working together, getting capital together to raise to help entrepreneurs start up businesses. All of that is happening in other states, and Florida, curiously, is at the top of the charts in starting new businesses, but we are close to the bottom of the country in being able to source expansion capital for them. And so what happens is we have a dynamic where companies that need investor funding aren't going to get it here. They are likely to get it in Silicon Valley. They're likely to get it in Austin or New York. And eventually they also may be asked to relocate. So, we have people, we invest in our kids, we put them through college, and then they don't find jobs in Florida. They want to go work at startups, or that the startup community might be a typical avenue for college grads. It's not there for everybody, and obviously young people have student loans to pay off and that kind of thing, and they're oftentimes getting jobs out of state, and that's a brain drain that I'm trying to stem, and it's all related to I think to just the lack of an ecosystem that we just don't have an established system like some of the other states do, and that's what I'm trying to start. And I'm trying to start it two ways to solve the two basic problems. One is the legislative front, which I can now hopefully do as a agency head in charge of the agency that used to be the one blocking efforts to grow Florida's economy in this regard. I'm now trying to, I'm now in the position where I hopefully can get some movement in the legislature to reduce some of the statutory barriers that are presently in place, which I can talk about. But the other side of the coin is, as you mentioned, is the education piece. And if you ask some people about our capital market, they'll say, of course we have a capital market in Florida, and of course we fund companies, and that's true. But what companies are we talking about? The top tier companies are always going to get funding. They're going to get it funded locally. They're going to get it funded out of state, whichever. The funds are there. But that realm is kind of the same, stomping ground where the VC firms are hunting, and it's really the top 1% of our companies, and it's the bottom 99% that are the ones that are struggling to find the capital they need. And that's what our focus is as an agency. It deliberately is to focus on the bottom 99. And working backwards, well, let me finish that point. We have an educational piece that we need to focus on. We need to get information out about opportunities, programs, and we need to do a much better job about that. Florida is very balkanized. I mean, we're not a compact state like I would say Georgia is, where we have a central city that everybody kind of like, is encircled. And we have many population centers, around our strangely designed state. And we are balkanized. And different groups, different cities are starting to talk to each other and starting to share resources. And that's a good thing. And we need to do a better job of it. And as I said, we start a lot of tech companies, but our college communities are just starting to catch up to an extent to be able to serve the needs of our startup community. And so we don't have the way I'd like to see, or the way it could be, where we have community colleges that are offering certificate programs, that we have just a recognition that we have an influx of citizens immigrating, and then we just have our homegrown community, which just needs to be served, and we need to be able to train our future employees to be able to serve this new marketplace that's developing. And so that's a part of this that we need to facilitate. We need to facilitate it through awareness. We need to educate investors. In Florida, they're typically, comfortable and historically have been real estate investors. And Florida's got plenty of real estate, but
right.
We haven't had a community that was savvy in investing in business, and I think that's a tide that is shifting. It's starting to become more prevalent. But we have to keep educating the community on the needs of the business community, and so that's the thing. But first, I gotta lay the rails, for the track to create the foundation of the ecosystem here and make it statewide. And
so because I many years ago, like quite a few years ago, probably 15 years ago. I remember because I had worked with it, and I had colleagues that had worked with it, and at that time, this was long before there was any kind of crowdfunding, and the government in Florida had funded this sort of like what you're talking about. It wasn't really, portal's not really the right word because the way technology was back then, but it was an awareness, if you will, of companies that had gone through the screening and had been approved and funded in some place, so that other angel groups in the state, because it is very spread out in where the angel groups are located, and even individuals, because I think at the time they recognized a lot of people. You got your snowbirds that come down, and they may be investors up in the Northeast, and then they're down here in the winter, and they're looking at deals and that kind of a thing. And it seemed to go pretty well together as far as elevating the companies that had qualified on that. And then I remember when the funding got I guess removed from the budget, right? And so it just sort of, because some of those folks I was working with, and another gentleman I ran into, he used to live here in Atlanta and he lives down in Florida. He had been asked to come in and help and look at it. So I think you've got a lot of like-minded people around the state that see that need, because they were very disappointed when it went away, because they recognized the economic impact that would have, that didn't give the visibility of those companies, the ones that start to get beyond that 1% you're talking about, that they do get some funding. And part of the best way to mitigate the risk of a company raising capital is access to more capital, right? So, right, they can raise their 100, 200 from this group, but if they can't raise the million or 2 million they really need, then they can't get there. And it takes a lot of time and money to go from group to group to group. And if your only access to capital is just these very narrow, angel groups and the gauntlet that they do, and they meet once a month, right? It's just so, I really applaud what you're doing. Do you find in you working on the outside of government, and then, from an elected standpoint, and then within, all the different functions, do you see have you seen that tide change? Is it fear based that they go away with that because of the fraud issues in the past and fear of fraud, or is it they just don't hear from their people in their community that this is having a positive economic impact, so they feel like they got to budget this and that, and it's not something they can see the outcome? Why do you feel like it has been so hot and cold when it comes to getting the legislative support that is needed to make this easier for companies and investors?
I don't have a good answer for that. I really don't know. And the climate does change from administration to administration. And I will say that our governor and our current cabinet, they're pro business, and that's why I got appointed. I pitched the idea of creating an ecosystem here, and they hired me. So
Yeah.
I think that as a thumbs up to we
Yeah.
like your idea. So this is the
Good.
right crew to be working under at
Yeah.
this time. And
Yeah.
so I would say the environment is right. Now, this predated the pandemic. This was my hiring process started in the fall of 2019. So I didn't start the job until March 2020, but right in like a week before the pandemic. But that they were supportive, and that was the vision I had, and so I'm trying to deliver it now, and
Yeah.
that is a wholesale rewrite of our securities code, and crowdfunding is a big feature of it because, as you mentioned, many states have state crowdfunding. I can't speak for other states, but Florida's was dead on arrival. It was patterned after the Jobs Act of 2012, and it was a reactionary effort on the part of the state to get crowdfunding going at a time when the SEC had not delivered on its rulemaking requirements to implement the federal crowdfunding system. So Florida enacted its statute in 2015, and we have had zero crowdfunding offerings ever since.
It's
And
just amazing. That is just amazing. I mean, we were chatting earlier. There's some key barriers to that. So why don't you list for our listeners so they understand what it is that it's really not that difficult. I mean, it's going to be difficult because everything's difficult when you have to get it legislatively approved. But the changes that you have identified are relatively small that would really make it so much easier for entrepreneurs to get access to the capital through an interstate crowdfunding offering.
yeah, I will say that the statute is presently extremely difficult to navigate, but that's for the issuers. But the real door or showstopper is the fact that we have a requirement for a crowdfund issuer to use a crowdfund portal, which is a separate business. So it's a third party intermediary, which also needs a license to do its business in the state. We don't have any portals, and so I mean, right there, crowdfunding doesn't work because without a portal, no issuer can use it. And so one of the nuances of our revision is to untether the portal requirement from a crowdfund wannabe issuer and allow portals. We want to incentivize portals to come to the state or start up in the state, and allow them to do other intrastate offerings. I don't see the need to tether them only to a crowdfund deal. I mean, those deals are capped, so therefore their fees are capped. And if they can do other, they can do a registered offering in state, or they can do a limited Reg D offering, perhaps. they're opening up doors to funding other businesses, not just crowdfunders, but potentially
Yeah.
any kind of business.
Yeah. So
And
do you see that where you'll add, because the benefit of a portal and on the Reg CF side of it, when it's national on that, is that you have some eyeballs on it
that's
to
right.
make sure that they have proper legal documents, they're set up properly. Just the fundamental blocking and tackling. It doesn't guarantee that the company is going to be successful in the long term, but at least you're not stepping into a quagmire because you forgot to ask this question because there's a standard. So do you see that if they don't go through a portal, that they would still have to do the kind of things they do under a Reg D 504, because that's really what it comes under. So they still have to have a legal document. They still have to have these other, an offering memorandum, a private placement. They still have to have, track their investors who are accredited and who's not accredited. They still have to do all of that stuff and have and maybe show it in advance. So because they do register with the state that they're doing the offering. And so then would the burden then go on the SEC within the state to look and make sure, check the boxes, and then investors can decide, do they go directly to the company or do they go through this other, because it's there's other benefits to having a portal?
Well, the benefit of crowdfunding is the ability to leverage the internet, and
Right.
that was the sea change in regulation that occurred with the Jobs Act, was the recognition that the internet is free, and it basically uh, accessible to, like, globally, right? And why can't we reach potential investors on the internet? Why can't we do that? And so at the federal level, I mean, they struggle with that because their system was built on brick and mortar, concepts, and the new reality is that people are communicating electronically. Um, I love that. I mean, but I also don't think that a securities issuer that feels like they can reach out to prospective investors on their own needs to do it through a third party. I mean, we already have a system in place that allows issuers to self underwrite. I mean, they could do their own offerings, and they can do their own offerings under the exemption statutes. They can do them. They can do a registered offering on their own if they wanted to. Why is crowdfunding like tied down with a third party requirement to be the internet portal?
That's bold thinking.
It doesn't make sense to me. I think I'm the only one saying that, but I think it's a cool idea. So we'll see how it plays out. But
well, you think about it, you're a securities attorney, so before there was ever any of this public solicitation, general solicitation, that was the sort of the gold rule. You couldn't general solicit, and
That's
some
right.
attorneys would be like, "Oh, you can't even have an interview that says you're raising capital." They would be so extreme, and then the other ones would be like, "Oh yeah, as long as you don't run an ad." You know what I mean? There would be this spectrum, but they always got legal counsel when it came up to it, and it was the way 504 and 506 have had traditionally been. If there was a problem because an investor had a problem, then they could file a complaint. It would get investigated. If they saw that they didn't do all the stuff and people got in trouble, you'd become bad actors. You have to return all the money. I have to advise companies on this all the time. It's like, don't do that. Don't do that, because you maybe get away with it, but if you don't, then you're gonna have to go pay back all your money and you're out of business, and so,
That's right.
and some fines and all this other kind of stuff, and maybe jail. And I'm not going to jail, so don't do that stuff, right? So do you see it really to kind of bring it back a little bit of with the traditional trust of the process and letting people just solicit without having that third party in there? Because it does make sense. Why not? It worked for since 1933 to do it the other way.
Yes. I mean, I used to say that speaking the truth usually cost about 20 grand. And so if you did a fully written, disclosed offering, I mean, you're running up a pretty expensive legal bill, right? But I don't know that we necessarily need like complete like public solicitation documents that are envisioned in the S1 type of SEC offering. The Reg A is a little lighter. The score offering is lighter. I mean, we have a scaled down system of disclosure, with ultimately designed to reduce the cost of the offering. And one of those ideas was embedded in the crowdfunding statute as intended. It was to make the offerings less expensive and reachable to
Right.
a broad audience. In practice, the federal system has become anything but that. I think they've become expensive. They're FINRA regulated. They go through compliance audits that cost thousands of dollars and multiple hours of time to deal with. And so the same old actors that want to like impede capital formation keep showing up. It just seems like that's the way it is. That just always happens in the process. That's what happened to our crowdfunding statute. I mean, there were plenty of naysayers who were saying,
what about this? Yeah. What about that?
we gotta cover this. People are going to get defrauded. And I'm like, yeah, but nope. I mean, people are buying lotto tickets,
and Bitcoin.
Right. Well, that's another topic. That's another topic. Keeping it apples to apples. The lotto tickets are, you could take your entire nest egg and burn it up in 1 hour on a Saturday night if you wanted to, and there's no disclosure, oops, you did it. You're now poor. What is the real threat here that we're trying to eliminate? And we want a fair playing field, no question. We want to protect investors. We want to encourage them, but we don't want to do it at the point where we shut down capitalism. And I mean, because we could overregulate this and extinguish capitalism in a heartbeat, and that's not the goal of the system.
Yeah.
So at least that's not my goal.
So do you see, where are you on the whole issue of finders versus licensed security folks? Do you see a place for finders to participate to help these young companies or these companies doing this? Okay, good.
Thank you for saying that. I mean, I see one of the beauties or benefits of the crowdfunding portal as an intermediary is it serves that function of bringing people who don't know the company to the company.
Yeah.
And vice versa. The finder is doing exactly the same thing, but more boots on the ground kind of thing.
Right.
And yes, so we are including in our statutory revision a program that would require or I would say allow the registration of finders, because I think it's the kind of system where it's going to be very similar to like real estate agents. They're out there bird dogging homeowners and trying to find deals that connect people, and they're going to get a commission, but they're not going to be the ones that are handling the cash from the homeowner. They're just they're connecting the parties and making sure the deal closes, right?
Yeah. Well, even like business brokers, right? It's just if they've
right.
It's tied to real estate licenses. So there is a licensing function within.
Exactly. So I think that, we solve a problem that it currently exists in the marketplace. People are acting as finders. They have been forever. It's just, at the risk of the issuer, that the issuer engages them, because right now they're functioning as unlicensed brokers. And without a license, they can queer an entire deal and cause a lot of financial harm to a lot of people.
Yeah.
So, if we have a registration scheme for those that pass the background checks, we legitimize a whole element of the marketplace and separate the goats from the sheep, because people with a license are going to now be able to say, hey, I could do this deal. Look, I'm on the
Right.
list. And,
Yeah. Yeah.
and thereby everybody who's not is excluded. So
That is so forward thinking, and so few folks out there in this business of helping entrepreneurs get access to capital understand the importance of somebody like that as a finder. That, you know, whether they're registering and do it all the time because they're just in the space of doing that, they're a great connector and networker, or if they're just somebody that once in a while will do it because they happen to know this person or that person or something like that, whatever, however way they want to play. It
sure,
just seems like it's always something that people dance around, trying to be within the rules, but also help the companies do what they need to do when they have, the access, right? So, okay. So
right.
what are some of the challenges that you see investors are facing in understanding? We talked about education a little bit. You talked about the students and getting opportunities and understanding the startup realm and some of these industries that you're focused on. What do you think is needed to bring more Tom, I call them Tom, Dick, and Harry's of investing, right? They're not the guy that sold a tech company and made gazillions of dollars or is on his third startup. Is the people that have built successful restaurant chains or built successful plumbing businesses, or they are in the construction business and want to diversify out of real estate, or they're people that have run other successful businesses or are high level in companies as executives that normally they might play the pink sheets or something. They're a savvy investor, and they didn't even know that they could participate in angel investing until they started to hear some stuff about crowdfunding, but they just don't know. And if they talk to their one of the biggest things I've always felt was an impediment to that was the whole fear of selling away that had been planted in the seeds of a lot of those people that manage folks' money. So they wouldn't be able to give them advice if they want to take 10% of their portfolio and put it into private equity of private companies. They didn't have anybody they could really ask about it. Right. I mean, so do you see that as once you get this fixed on the crowdfunding interstate side, that there'll be something, to help make it more comfortable, make it seem more legitimate to people that have potential to invest?
I think it's a multifaceted answer, to that question, because it's a really big question. Because there's not just one size of investor for one thing, but uh, making the opportunities available is part of it. The awareness, um, to potential investors, because pretty much everybody is a potential investor, right? I mean, anybody could be. And making crowdfunding truly available in the state, I think, can be an on ramp to a broader experiential aspect for investors, because the crowdfunding it by nature is likely to be a small dollar investment opportunity, and so people can sort of just almost like you mentioned Bitcoin or whatever, or crypto. People can get into that system with a couple of bucks, and they can buy their little piece of crypto right now. It could be just like a fraction of a coin of some enterprise, right? And then they can say, "Oh, I got crypto." Well, they can do the same with crowdfunding too. I mean, they can put in 25 bucks and say they've got part of the pizza parlor or something, and they that's a way to start. And but they need to get experience, and the experience, frankly, has to come from education first. I mean, experience, the hard way is, they try it, they lose money, so
Yeah.
uh, always a risk, just like buying your lotto ticket. Well, at least they print the odds, on the back of it, right? You
Yeah,
know,
when I was it was fun when I was out visiting friends in San Francisco a few years back when I was first coming out with the book. And one of them was a tenured professor, and the other was high level licensed electrician, this couple, and they were like, angel investing, what's that? And I said, and like, why are you bringing out this book or whatever? I said, well, there's all kinds of stuff that's happening right now. And the traditional angels that do this, I said, but think of it this way. You guys have a little nest egg. Let's say there's a restaurant that you walk down the street to and you go there every Friday. You love it. There's always a line, but you're okay with waiting because the food's so good. And an owner knows you, and she comes to you, she said, hey, the hairdresser place next door is closing. I have an opportunity to go in there and expand my restaurant because look at this line. All I need to do is all I need to do is get $10,000 because the bank will give me some money for buying more stuff. And if I get 10 of my best customers to $1,000 a piece, I can be there. You guys in? And you might say, oh, sure, we love this restaurant. This is great. We totally want to do that. But if you knew, because that would be an emotional decision, if you had just a little bit of like checklist of things to think about, you might say, well, what's your profit right now? And oh, well, maybe we look at your books and make sure she's okay with you looking at her books, right? And what are you going to do with and so yeah, you're going to do that. But how about if you just raise all of your rates for your plates by $1 a plate, and let's see if the lines hold. Because then you've increased your profit by 10, 15, 20%. Because if they just expand, they're going to have double the expenses in a way, but may not have additional profit to come because they have to have more wait staff. They have to have, right? So those are
Right.
the basic little things that a novice investor, that's really common sense. But a lot of times the emotional connection, and that's kind of the problem sometimes with some of these crowdfunding because it's like a video that they fall in love with. It's just this little basic thing that I think it would be hopefully as any organization, any state that's doing this, that's looking to grow their economics, will think about not leaving those kind of investors behind because that restaurant needs that kind of help or whatever it is that they like as a customer. But they also they need some basics of what do you look for? What are some common sense questions to make sure that you don't haven't both set yourself up for failure? The business itself, because they're not growing, they're not preparing to grow properly. They're making an emotional decision, and the investor making an emotional decision, and then it's just a recipe for trouble in a lot of cases. So I think there's so much opportunity, like you say, for all types of investors and all types of companies if Florida can get this right. And I really, I'm in your cheerleading corner on that.
Right. Well, thank you. We hope to have on our website, an investor awareness, like an educational platform where exactly these types of points are going to be, just stated. These are things that prospective investors, ought to consider. Ask questions about these different things, and just have it out there. I mean, we can put that out there for free. It's no cost to the public directly, so that we can serve as an educational warehouse. But it's more than just us. I mean, we have to go around, and remind people, of basics, and constantly, and on the other end of the scale, I'd like to see that we have a um, financial education, um, like requirement. We have it now in high school. An elective has been
Oh yeah.
made in our system, but we really need it more broadly. I mean, people need to like graduate high school, I think, and be able to, balance a checkbook and understand. I mean, basic finance. They just have to. I mean, where else are they going to learn it
Right.
except the hard way? And so we need to be teaching them, and as much as we can. I mean, parents need to be doing this as well, and making sure their kids know basics about basic accounting, basic finance, so that when they go off into the real world, they can think about uh, you know putting aside money in an IRA or and these other things that other tools that are available. Just knowing that they can do it, and knowing the benefits of doing it, and what they should be looking for. And then you have an IRA. It's offered by a custodian. If you get more inventive, you could consider a self-directed IRA. And then you could take that money and invest it directly in things that you're interested in. What's a good idea? Well, ask questions and know what the questions are, and then make sure you're happy with the answers. And like you said, I mean, yeah, sure, the restaurant, you like going there, but you want to make sure you get the you go in every opportunity eyes wide open and make sure it's right for you.
Right.
It may not be right for you, it might be right for the next person, and
right.
So
yeah. So the link I have for listeners to get involved and help is businessaccelerationnetwork.com/Florida. Is that correct?
That is a link that will help you get in contact with us. We, as part of our legislative effort, we are literally going around the state soliciting public feedback. I mean, I come into the office here with my own background and my own notions of what I think is wrong and what I think the pain points are. But I'm asking the marketplace, to give us their feedback. And I've been surprised because I found out I didn't know everything. I found people have, bigger ideas or other issues I may have encountered as a lawyer, but, didn't think of them as, true barriers, but other people are upset about them. And so they've taken this opportunity to throw up on our website, all of their peeves. And so I think it's fascinating. It's been it's resulted in us having a more holistic approach to fact finding. And Good. I think it's the right thing to do, and we're doing market research basically, and understanding what the market wants, and then we as an agency are trying to fashion the legislative means to reach those issues. And some of them are not within our agency's mission. They're broader, and we've actually spoken to some other agencies already about some of the stuff that's on our website, so they know about it, and we want to be able to report back, like, this is what's going on. This is what the other agency may be doing, but it might be a broader legislative initiative that is needed to encompass some of these broader ideas, but they're real, and they're pain points, and so this has been good. I mean, I think it may be cathartic in a way for the state to be able to say, okay, well, now we got a state agency that's listening to us, and believe me, I mean, as long as I'm alive, I'm gonna this is my mission. This is why I took the job, is to create this ecosystem. I want to make sure I do it right, and
Very good.
We've done surveys to the FINRA license portals, asking them what their pain points are. And we've also asked them, what would it take for you to come to Florida and set up shop here, and try to understand what their mindset is. And so all of this feedback is helpful, but it's not all limited to capital raising, but it's kind of morphed in some respects into a broader issue of, like, doing business in Florida. Like, these are our pain points in doing business in Florida, and that's a very interesting issue that I didn't anticipate when I first started asking the questions. So we'll see where it goes.
Okay, so folks, that's businessaccelerationnetwork.com/Florida. And is there like 3 questions or like 2 questions that you say, if this is what we really want to have feedback on, to give people some clarity on how to direct their comments or their response?
We have the issues like set up so that they should channel to us in a meaningful way. But
so they can just like point and click and choose and then comment.
Yeah,
there
like feedback boxes to fill in. And what we're doing is we're putting up on the website our accumulated comments. So people can read what's been said and hopefully add to it, and rather than repeating what we've already been told. But we're hoping that by posting that stuff real time, that people are seeing, wow, people, they care about this issue and I care about it. They don't have to necessarily repeat it, but when we're done with it, we're going to try to do a survey and have people rank what their on the list we've accumulated, what their favorites are, and we'll try to make sure that we specifically address them as best we can.
For legislative changes or
Right.
overall, in a more holistic organic, because, some of the stuff is specifically to a legislative action. And then some of it is finding private resources to do public-private partnerships on education and development and things like that. And
Yes,
also
I mean,
probably some funding to throw into the ones to provide.
oh yeah, I mean, some of them are
training.
complaints about my agency. I mean, we were in the realm of stuff on the comments, but yes, I mean, education and lack of it is an issue, and people have been chiming in about that, and so it's all good because we're not going to solve it in this first legislative session. It's going to be a thing we're going to keep working at, and hopefully that the comments keep growing. We continue to address them, and then more will come up, and we'll hopefully address those. But
Yeah.
we're already envisioning that there's a longer term piece to this, and one of the ideas, as I mentioned before we got on this, that we're wondering whether we can tie in an education requirement in financial matters or marketing or business startup, entrepreneurship or something along those lines with
Yeah.
a certificate program. So we have, if you have the certificate, then maybe you qualify for a certain level of exempt offering status, where your compliance costs could be reduced because you can demonstrate you're an entrepreneur who has a certificate of such and such,
Yeah.
and therefore you might represent a lower risk, to a prospective
Yeah.
investor. I mean, we're playing with different ideas like that. So
So the SBDC, I assume you're just like Georgia. They're all over in many of your universities, and they serve that kind of function, and maybe it's
yes,
shining up that apple of what they are, to say they've kind of got the infrastructure in there. They've got people that volunteer on that. They got paid people that are expertise. They got college kids that help out as interns in that. And so I always send, if somebody's short on funds to pay for something, I say, well, the first thing you need to do is go get into one of those low cost SBDC programs.
I agree, and that is certainly one of the participants that at least I have in mind with respect to getting some sort of training or training and academic feedback, or what have you, from the different programs can offer, and maybe we can channel it into a system where we actually have a programmatic solution to a sector of the capital needs of the community.
Excellent.
Something to talk about.
Yeah. So thank you again so much for being on the show. Anything you want to add in your final comments here, Commissioner Weigel?
Well, thank you so much, Karen. I really appreciate the opportunity to talk about what we're doing, and I hope this podcast reaches Floridians in particular, but everybody's got a relative in Florida, so
Yeah.
it affects everybody, and whether they're here now or they're maybe one day, we are interested in all the best ideas, and so send them our way. We're trying to make something work here, and and it's exciting, and so I look forward to the mass participation help out here. Thank you so much.
Yes, absolutely. I'm looking forward to sharing this and making sure that the people I know down in Florida that have a stake in this will make sure that they give you your feedback and connect up with you as well.
Great.
So.
Thank you so much.
All right. Thank you. Thank you, everybody, for tuning in. Please share this podcast with anybody you know in Florida. If they're an entrepreneur or any type of potential investor, if they're already active investor, please go and share this with them. And thank you very much for tuning in. See you next week. Onwards and upwards.